Here's how you can buy a house with no money down, no real credit score requirement, and the best part of all, no mortgage insurance. It's called a VA loan. VA loans are for those that have served in the military, and they're backed by the government, the United States Department of Veteran Affairs. In today's video, we're going to discuss the VA loan requirements for 2023. We're going to answer some commonly asked questions. We're also going to do some calculations to show you how to calculate the funding fee so that if you're trying to do some back of the napkin calculations to see if you qualify, this will essentially give you an outline to go by. Now, one thing I want to start with when talking about VA financing is VA financing really has the most flexible guidelines when it comes to underwriting. They allow the highest debt to income ratio, which essentially means they allow you to use more of your monthly income towards the mortgage payment than any other loan program out there. On top of that, they don't really have a credit score requirement. Now, some of the stuff you'll read online says that they require a 580 credit score, but the reality is they don't really have a minimum. But one thing to keep in mind is the lower your credit scores, the more difficult it's going to be to qualify, the more strict the guidelines are going to be. In fact, if you have a credit score lower than 600, chances are it's going to require a manual underwrite, which means it might be a little bit more difficult to get approved for. And another commonly asked question that comes up is, are VA loans only for first-time homebuyers? And the answer is no. You can use a VA loan as your first purchase. You can also use a VA loan as your second or third purchase. Now, if you're trying to buy your second home after already purchasing a home using VA, it's going to come down to how much entitlement you have left on your certificate of eligibility, which will ultimately determine whether or not you can purchase that second home using VA and how much you may have to put down. In fact, you can actually have two VA loans at the same time, which is something I see people all the time saying can't happen. In fact, it can happen. But again, it all comes down to the entitlement you have, and we'll talk about how to determine that in just a minute. Now, before we actually dive into the loan requirements for 2023, there's something I want to mention. When you're searching for a mortgage lender to get approved to buy a house with a VA loan, do not go online and search for VA lenders, because chances are you're going to come across one of three names, and all three of those companies pay a lot of money to be at the top of search results. In fact, many of you might have a bank account or carry insurance with one of those companies. And if it's not one of those two, it's one of the other companies out there. And the reason you shouldn't be using these companies is these companies are for-profit companies. Now, they'll go out and they'll say that they're all about veterans, but at the same time, they're going to charge you more money. They're going to charge you higher interest rate on top of having much stricter guidelines than going with a traditional broker. So just make sure if you're out there looking for a VA loan that you know exactly who you're working with, because many of these companies will say that they're all about veterans, but at the same time charge you way more fees than a traditional mortgage broker. So with that said, if you need a referral to a mortgage broker, someone that I know, like, and trust that'll guide you through that process and will take great care of you, do me a favor and check the link below. Now, who is eligible to use a VA loan? That's one of the loan requirements out there. You actually have to be eligible for VA financing. Myself, I've never served in the military. I can't go out and use VA financing. But with that said, there are some people that have actually served in the military that aren't eligible for VA financing as well. So what does the VA actually look at to determine your eligibility? Well, their eligibility requirement is active duty or served 90 continuous days, or met length of service requirement, which is generally 90 days in wartime and 181 days in peacetime, or completed 90 days of active duty or 6 credible years in selected reserve or National Guard. Or you're a surviving spouse of a veteran who died while in service or from a service-related disability and have not been remarried. So I realize I just threw a lot of different things at you that may or may not fit your position, your criteria, if you will. I also provided a link below for you to actually go to eBenefits and check your eligibility there. You can pull a certificate of eligibility to see if you're actually eligible to purchase using VA financing, and it will also let you know how much entitlement you have. And this is key because this is one of the documents that lenders are going to want to see when you're going through the pre-approval process. Now, many lenders out there can actually pull these on your behalf, but if you're questioning whether or not your time in service is actually eligible, you can do this work up front. Now that we know you're eligible to purchase using VA financing, let's talk about some of the benefits of using VA financing, which kind of go hand in hand with the requirements. The main thing is VA doesn't require a down payment, no money down, and there's no loan limit. So you can actually purchase $1 million, $2 million homes with no money down. Now, with that said, there are other requirements that you have to meet to see if you're eligible, and we'll talk about some of those here in just a minute. But buying with no money down is a huge benefit when using VA financing. On top of that, other loan programs out there require mortgage insurance when you put less than 20% down. VA doesn't require mortgage insurance at all. So you can buy with as little as zero money down and avoid mortgage insurance altogether, which is why I believe VA is the best loan program out there. Now, I often have people reaching out saying, well, should I use VA financing or should I use conventional financing? I actually have money to put down. I don't really need to use VA. What I would say is talk to a mortgage professional. Have them run the numbers side by side. The saying goes, the numbers never lie. So by looking at the numbers, you'll be able to compare both loan programs and see which makes the most sense for you. So in addition to having no down payment, no mortgage insurance, VA doesn't really have a credit score requirement, as we mentioned earlier. Now, there's a lot of websites out there and articles online saying that you need to have at least a 580. And quite frankly, you probably do need to have at least a 580, although they will make exceptions when you have lower than those credit scores. And as I mentioned, if you have lower than a 600, they're going to want to do a manual underwrite on your loan, which means they're going to be a little bit more strict on the qualifications. But typically speaking, if you have higher than a 600 credit score, you're likely going to be eligible to use VA financing, assuming you meet the other criteria. Now, we mentioned some of the pros of using VA financing, like no down payment, no mortgage insurance, low credit scores, all of that good stuff. But there are a couple of cons as well. And one of the main cons is that VA requires an upfront funding fee when using VA financing for the first time. In fact, they also require it on subsequent uses, but the percentage changes on those loans. As a first-time homebuyer using VA financing for the first time, they're going to require a 2.3% funding fee. And this funding fee is added to your purchase price. So you're actually financing this funding fee up front. So let's just say you're buying a $350,000 home and you're not exempt from the funding fee. And this is your first time use, so it's 2.3%. And so if you're buying that $350,000 home and you're putting no money down, that's $350,000 times 2.3%, which means that you're actually going to be financing $358,050, which is more than the original purchase price of that home. So when buying using VA, putting no money down, you're actually going to end up owing more on that home than it's worth when you close on that property. And that's something that you need to be aware of, especially if you're only considering owning that home for a couple of years. When using VA financing, you need to have a longer term time horizon when putting no money down. Otherwise, you could end up underwater on that property. Take the last 2 years, for example. We've seen homes appreciate nearly 30 to 40% in many markets out there. And because of that, we're likely to see home prices move sideways for a couple of years. In fact, many of the people that purchased in the first part of 2022 are now underwater on their homes because home values have depreciated a little bit since that time. So I just want to make sure you understand you need to have a longer term time horizon. I know oftentimes, when you're in the military and you're on active duty, you might be moved around. You might be moved from, say, Southern California to Florida for some reason. So you just need to make sure when you're purchasing, you have that longer term time horizon so you're not putting yourself in a difficult position. Another con when using VA financing is that VA requires that all condos be VA approved. So in many markets out there that have a big military presence, a lot of the condos in that community are going to be VA approved. But oftentimes veterans get out of service and they move to a different area and they might be looking to purchase a condo. Well, if that condo doesn't meet the VA guidelines, if it's not approved, then you can't do VA financing on that property, which in some communities takes a lot of the potential inventory completely out of play. Now, there are some ways around it. You can do VA spot approvals. You can do a couple of different things to try to get properties approved for VA financing, but there's no guarantees, and it can often take a lot longer to get those approved, which means if you're in a competitive market, it may not end up working out. And lastly, one of the other cons is that it has to be a primary resident. You can't purchase an investment property using a VA loan. VA requires that you live in that property. Now, one of the questions that we get all the time is that, can I buy a home with a VA loan and then after a period of time turn that property into an investment property? And the easy answer is yes. And while there's not a strict requirement on the time frame, I would say that most people say after a year of living in the home is when you can turn it into an investment property and then begin to rent it out. Now, before we get into the last couple of VA requirements, I want to take a minute here and ask a favor. If you find any value in this video at all, do me a favor and hit that thumbs up, and also be sure to subscribe to the channel, as both of these things help the YouTube algorithm and also helps me accomplish my goal of helping educate more home buyers. Now, earlier in the video, I mentioned how flexible VA guidelines are. And one of the main reasons I say they are flexible is because they allow you to use more of your income towards debt. Many loan programs out there, like conventional financing, max you out at a 45% debt to income ratio. FHA will go as high as a 57% debt to income ratio. But VA financing, while the guidelines say that their max is 41%, you can get 45, 50% debt to income ratios approved all day long. But here's the crazy thing. I've actually seen a VA loan as high as a 67% get approved. How do I know that? Because it was my client purchasing a property. With that said, VA is the most flexible, which means that if you're considering using VA, you're likely going to qualify for more home using VA than any other loan program out there, because they allow such high debt to income ratios on top of not having any mortgage insurance. But you need to make sure you're working with a professional. You're not out there working with one of the companies that I mentioned earlier that have a bunch of overlays on their programs. What is an overlay? An overlay is, VA has their guidelines. An overlay means, well, those guidelines are too lenient. We're going to make them a little bit more strict, and therefore, even though VA allows it, we're not going to allow it, is what a lot of banks do. Well, many brokers out there have access to lenders that don't have these overlays. So just make sure you're working not only with a broker, but you're working with an expert that understands VA loans. If you need one, there's a link in the description below. And one of the other things I want to address before we talk about employment and assets is appraisals. I often hear people saying VA appraisers are way more strict than any other loan program out there, and the reality is they're not. VA appraisers are required to look for certain things in the property, and if they're not there, they have to mention them and or they have to require them, which I would say is more or less not an issue. But one of the cool things about VA appraisals is that they have to let you know if the value is going to come in less than the purchase price. When you're traditionally buying a house and you get an appraisal on that property, the appraiser can just bring it in less than the purchase price without ever warning you. Well, VA has to warn you that they don't see the comparables to actually bring in that value, which gives you an opportunity to rebut it, if you will, and provide your own comparables to help bring up that value. And this is super cool because it allows you to not be surprised when the appraisal comes in, and it also gives you an opportunity to help the appraiser justify that value. The last thing I want to talk about with regards to VA loan requirements is income and assets. What is required with regards to income, assets, employment? Well, most lenders out there want to see that you're employed for the last 2 years in the same line of work, steady employment, which means that you've been doing the same type of job for the last 2 years, which means if you've been a teacher, you've been a teacher for the last 2 years. If you've been a real estate agent, you've been a real estate agent for the last 2 years. What they don't like to see is when you've been a wage earner of a job receiving a steady paycheck every month, and now you've become a commission salesperson where you're getting a 1099. That can often upset your qualifications. They just want to see steady income and steady employment. Now, there are always caveats and exceptions to the rule, and that's why you need to make sure you're working with a professional and understand and explain your situation, and they can tell you if they can work around it or not. Over the last couple of years, we've seen a lot of gaps of employment just because of the economy and people being laid off and or changing jobs. And what I will say is VA is flexible and understanding in some of these changes. So don't get so caught up on meeting the 2-year requirement and being specific in the line of work and all of that stuff. Just explain your situation to your mortgage professional and let them see if it's something they can work with. So how much income and assets is actually required? There's no minimum requirement when it comes to income and or assets required. Assets can be anything from checking to savings to 401k to an IRA. And VA doesn't really have a set requirement, but all of these things are compensating factors. When you have money in the bank, you have higher credit scores, these items will actually help you get approved, especially if you're going into a position where you have to be manually underwritten, like I mentioned earlier. When having those compensating factors, it will actually help out your situation. But like I said several times in this video, just make sure you're working with a professional, somebody that understands VA loans, an expert, because oftentimes you'll have people out there that don't truly understand it, saying that you don't qualify when in fact you really do. Now I realize I just threw a lot of information out there at you. Maybe you're not ready to purchase a home. Maybe you're just starting the process and wondering what to do next. Well, I actually created a first-time home buyer course to guide you through the entire process of buying a home from A to Z, but to also make sure you fully understand the process. So if you're interested in that, do me a favor and check the link below. Now, before we exit here, I just want to take a minute and say thank you for your service. If you are a veteran, you've served our country, I appreciate you, and I'm grateful for all that you've done. Lastly, if you want some additional information on VA loans, do me a favor and check this link here.